So, are you thinking about buying a new car next year? Well, listen up. There's a brand new tax deduction that could save you a serious chunk of change. But, and this is a big but, it could also cost you a fortune if you're not paying attention. This thing is loaded with confusing rules and really easy to miss traps. So, today we're going to crack the code so you can walk onto that dealership lot with total confidence. Okay, just to show you how tricky this can get, let's start with a little pop quiz. You're looking at two of the most popular minivans on the road today, the Chrysler Pacifica and the Toyota Sienna. Now, one is from an iconic American brand, the other from a Japanese one. So which one do you think qualifies for the Made in America tax deduction? Think about it for a sec. Got your answer? Let's see if you're right. And surprise, the answer probably flips everything you thought you knew. The Chrysler Pacifica, that all-American minivan, is actually put together in Windsor, Canada. That makes it completely ineligible. Meanwhile, the Toyota Sienna, it rolls off the assembly line right in Princeton, Indiana, making it eligible. This is exactly what we're calling the minivan trap. And it's proof that when it comes to this law, the brand on the hood is dangerously misleading. To make sure you don't fall for traps like that, we have to start our investigation by correcting the single biggest piece of misinformation that's floating around. And trust me, this isn't some minor detail. It's the difference between saving thousands of dollars and maybe just a few hundred. We're talking about the critical difference between a deduction and a credit. So what's the big deal? Well, a tax deduction just lowers the amount of your income that the government can tax. How much it's worth to you really depends on your tax bracket. But a tax credit? That's the holy grail. It's a direct, dollar-for-dollar reduction of your final tax bill. A credit is always worth more than a deduction of the same amount. Getting this wrong is the first and honestly the most expensive mistake you can possibly make. And you know why so many people are confused? Because of quotes just like this one. This is from the U.S. Transportation Secretary, saying you get a $10,000 tax credit. Plain and simple, that statement is factually incorrect. And if you go out and make a huge financial decision based on that advice, you are in for a very, very rude awakening come tax time. Okay, so let's cut through the noise. What is this deduction actually worth? Let's do the real math. If you get the maximum $10,000 deduction, and let's say you're in the 22% federal tax bracket, your actual tax savings would be $2,200. Now look, that's still a nice chunk of money, but it is a world away from the $10,000 you might have been expecting. For most people, we're talking a few $100s in savings per year. All right, now that we have our expectations in check, let's figure out who actually qualifies. To make sure you're on solid ground with the IRS, you need to think of this like you're conducting your own audit. There are 4 non-negotiable pillars of eligibility. You have to meet every single one, or the vehicle is out. Here they are, the 4 pillars. First up, the loan has to be brand new, taken out after December 31st, 2024. Simple enough. Second, the vehicle itself has to be new, not used, for personal use, and under 14,000 pounds, so no used cars or giant commercial trucks. Third, as we saw with the minivans, final assembly must be in the U.S. And finally, number 4, there's an income test. The deduction starts to fade away if your income is over 100,000 for single filers, or 200,000 if you're filing joint. Now, of those 4 pillars, the one that trips up almost everyone is that assembly rule. So how can you be 100% sure where a car was actually made? Well, the answer is hiding in plain sight, stamped right on the car itself. It's the Vehicle Identification Number, or the VIN. This is the easiest trick in the book. You only need to look at the very first digit of the VIN. That's it. If that first number is a 1, a 4, a 5, or a 7, congratulations. That car was assembled in the United States and it passes the test. If it starts with a 2, like many of those Chryslers, it's from Canada. A 3 means Mexico. J is for Japan, K is for Korea, W for Germany. You get the idea. This is the one foolproof check you can do right there on the lot in about 5 seconds. Okay, so you've done your homework, you've checked the VIN, you've bought an eligible car. What's next? Well, now you have to actually claim the deduction on your taxes. The IRS has a new form just for this, and we're going to walk through the most important parts right now. The form you're going to need is called Schedule 1A. And you're looking for a brand new section, Part 4. This is where all that research pays off and you officially stake your claim with the IRS. So let's zoom in on the key lines you absolutely cannot get wrong. First step is line 22. Think of it as the evidence locker. You have to enter the car's full VIN right here. This is not optional, and the IRS will use it to check the assembly location. Next, line 24 is the cap. It limits your deduction to either the total interest you paid that year or $10,000, whichever is less. And finally, lines 27 through 30 are where the phase-out math happens, which will reduce your deduction if your income is over those limits we talked about earlier. So after all of that, the financial forensics, the audit protocol, the VIN decoding, what's the final verdict? What is the one thing you need to remember from all of this? It really just comes down to these 4 points. Number 1, this is a deduction, not a life-changing $10,000 credit. 2, because of that, your actual savings are probably going to be a few $100s a year. 3, and this is the big one, the brand of the car tells you nothing about whether it qualifies. And finally, number 4, that first digit of the VIN, that is your ultimate source of truth. So I'll leave you with one last question. When you're standing there at the dealership, about to sign on the dotted line for one of your biggest purchases of the year, what are you going to trust? The familiar logo on the grille or that 17-digit code stamped into the dash? Now you know which one holds the key.